Hello everyone, welcome to the Manta Trends webcast. My name is Ivy Lamb, and I'll be your host for today's event. Grow your small business, add new products and services. We're happy to have you with us today, and we hope you'll tweet about today's event using hashtag MantaTrends. Before we dive in, I want to cover some important housekeeping items about the event. During the webcast, you should see a slide area, which will allow you to view the webcast. On top of the slide area, there are 3 tabs: Ask a Question, Attachments, and Rate This. Click on the Ask a Question tab to ask a question at any time during the webcast. We'll try to respond during the Q&A at the end of the event. If you're having technical difficulties, please email webinarhelp@manta.com. My colleague Graham is on hand answering your technical questions, so just send him a note. Now, on to today's topic. Adding new products and services can be a great way for small businesses looking to grow. New products and services can help you stay competitive, reach new customers, and sell more to your existing customers. If you're considering adding new products or services to your business, Manta has some tips for making your efforts successful. The first step is to identify your target audience. You can't develop a product if you don't know who you hope to sell your product to. Look at resources like Nielsen's Market Segmentation Research, which is linked in our Attachments tab, government data, universities, and trade publications to better understand your customers and your industry. It's especially important to define who your best customers are. Where do they live? What's their average income? Even a small amount of research will help you with the next steps in this process. Once you have an idea who your target customers are, it's time to start dreaming up ideas. Don't judge your ideas right away. Give yourself some space to do some creative thinking. Thinking about ways that you can solve a problem or improve a process for your customers is a great place to start. Once you narrow your idea, it's good to test out your product and get feedback from your actual customers, and not just friends and family. This will help you get a sense for how successful the product or service might be and allow you to make tweaks before you launch. There's an important point I mentioned in the last slide that I want to spend a little more time talking about. I mentioned that thinking of ways to solve a problem for your customers can be a great way to jumpstart your brainstorming. But the usefulness of this concept doesn't stop there. Am I solving a problem? Is a question you should ask yourself at every stage in the process of developing a new product or service. Why is that so important? Well, just because your new product seems like a good idea to you doesn't mean your customers want it. Customers aren't interested in a product's fancy features. They're interested in how it will help them achieve their goal. As legendary Harvard Business School marketing professor Theodore Levitt put it, people don't want to buy a quarter-inch drill. They want a quarter-inch hole. So once you've used this principle to hone in on your great idea, you should use it to craft your marketing and promotion as well. Let customers know how it's going to make their life easier. When you build your product and your marketing around filling a need, you're far more likely to be successful. Now, once you've developed your new product and a marketing plan, you'll also need to think about some of the other implications of adding new products and services to your business. Our guest expert, Sam Bedford, is here to help us understand how adding new products and services can change the way you handle sales tax. Also, just as a reminder, you can submit questions under our Ask a Question tab at any time during the webcast, and we will do our best to answer them at the end of the presentation. Now, I'm going to turn it over to Sam. Thank you so much for joining us today, and would you mind introducing yourself?
Sure, thanks, Ivy. So to give you all a little background on myself, over the last few years, even prior to joining the Avalara team, I've worked very closely with a lot of similar companies as many of you who are looking to grow their product lines, expand from traditional retail to e-commerce, and even move from old business to business to direct to consumer online through marketplaces and e-commerce. So with many of those companies, some of the common assumptions that businesses make is that new products will be taxed the same way their old products were taxed. There are a number of factors that play into the taxability of your products. So depending on your nexus, your products may be significantly taxed differently, whether you are expanding your nexus or your product offering. Even distribution. You have to stay ahead of the game. So staying ahead of the game becomes more and more difficult the more products and services you're offering. So just remember that with more product meaning more revenue, the more revenue may mean a greater risk of audit. So as we move forward here, while I'm talking through some of these points, if you think of any questions, as Ivy mentioned, don't hesitate to go ahead and put those in the question box there on the right, and we'll address those in our Q&A. So just talking a little bit about avoiding audits, that can be a lot for a business to take on. So I recommend doing your research in the beginning. So study the implications of the new products and their taxability. Taxability of even simple tangible products like grocery items can have differing taxability and varying taxability based on the ingredients, as well as even items like clothing and apparel can be taxed differently from state to state. States like New York have a threshold of $110. Anything under $110 is tax-free. Anything over $110 is considered a luxury item, therefore fully taxable. Another example is software as a service. Some states tax software as a service the full amount, others have partial taxability. Some states even classify it as an exempt item. So that can also include products like downloadable music, movies, and other types of software. Moving forward from product and service taxability, I want to talk a little bit about automation versus manually handling your sales tax compliance. On average, businesses spend almost 13 hours calculating sales tax each month. They spend over 18 hours managing exemption certificates and even 11 hours filing and remitting with the states. So Avalara offers a centralized sales tax engine for your sales tax compliance. Our compliance team is in daily correspondence with the states, 5 of which actually use Avalara as their compliance engine. So what this provides you at a high level is a trusted solution for guaranteed accurate sales tax calculation, exemption certificate management, and guaranteed on-time and accurate filing with the states. So I'm going to hand things back over to Ivy for the Q&A, and as we cover these questions and you hear other questions from the audience, feel free to type your questions in and we'll get to those as soon as possible.
Thank you so much, Sam. Just for those attendees who maybe didn't attend our recent webinar on sales tax or are less familiar with the topic, could you just give a quick definition of nexus?
Sure. So nexus is loosely defined by the federal government as a substantial physical presence within a state. Getting a little more granular than that, each state views nexus differently. So some states consider owning product in a state a nexus creating activity, while other states may not.
Okay, so that's another issue where it really varies state to state.
For sure. So with each state viewing it differently, there's a number of factors. It's not just owning product or having a warehouse or a retail location. 1099 employees, W-2 employees, sales reps traveling out into other states can create nexus. And it can be very strenuous on a business to really identify if their activities are creating that nexus or not.
Great. Well, thank you so much for clarifying that for us. I have a question here from an audience member. If I decide to add a new service to my business and not a product, do I need to worry about researching sales tax?
Definitely. So with services, a lot of times providing a service within a state, even if you don't typically do business there or have any physical presence, just simply offering that service into that state can create nexus.
Okay. Can you give an example of, I'm just curious, just following up here, can you give an example of a service that's taxed in a given state?
Sure. So I worked with some installation companies. One company I worked with had primarily sold window coverings and blinds, and they realized as they were traveling into other jurisdictions within their home state, like Colorado, who has local jurisdictional levels, as well as traveling into neighboring states of Colorado, was creating nexus, even though they had no physical presence, but they were offering those installation services there.
Interesting. Another question from the audience. Do states keep a list of what they tax and what they don't tax? And if so, where can I find that list?
In most cases, depending on the state, whether they call it the Department of Revenue or Board of Equalization, within their website, if you can find it, in most cases it's there. I found it pretty difficult just doing some research myself, so that can be a huge task to undertake to identify exactly what product or service and how that state classifies it.
Great, thank you. One more question. Should I research sales tax before or after I've developed my new idea?
I always recommend looking into the sales tax prior to launching a new item or service. It's a good idea to, on day one, really, to have a good understanding of the implications on the business as to how that product is going to be taxed or if it may increase that nexus footprint.
Great. Well, thank you so much, Sam, for joining us today. We really appreciate it. I also want to thank Avalara for sponsoring this event today. And thank you, everyone, for attending.
Thanks, Ivy.